Good evening, Nick Kim in from VolumeProfileTrader.com on Monday, May 28th, and wanted to give you a little update on the market. The futures were open today, but the actual stock exchanges weren't. However, with that said, I think that you can still do a thorough review on the market and kind of see where we're trying to go, and the possibilities, how to manage risk, etc. One thing before that, if you do want to take part in the trading room this week, send me an email tonight. This is really your last opportunity, and kind of go from there. I will send out an email to those who have emailed me, and for those who emailed me tonight on further details, probably with tomorrow night's video. So just be looking out for that and don't miss out on the opportunity. I think it will fit everyone. So the S&P continues to hold above since this low made back on the 21st, which was around 1287 on the S&P. 233 day moving average, that's a fib number. That's, you can see it's generally flatlined, but it's support, and the point of control for the year at 1308. The past couple of days, that's been a pretty good support level. It's actually been a pretty good pivot level throughout the time price has been around this price, the 1308 level. So I'm still a believer that the market's going to go higher before it goes lower, and the reason why: the point of control for May is down at these levels. As long as we stay above it, here's the point of control for May. Let me zoom out a little bit so we can see. Okay, there we go. The point of control for May, 1312. As long as we stay above it, we should be okay. If we dip down below it, you do want to be cautious, let's put it that way. But for an upside target, I'd be looking back at this balance range from anywhere from 1346 or so up to 1363. That's a big target, but it's there, and I think that the market could potentially get there. One other thing to look at is potential flat top with some rising higher lows. That could, it's a continuation pattern, which would result to more downside, but you could easily see an upside breakout. I continue to believe, as long as prices as long as the point of control for May is below price, we're okay to the long side. Overall, the uptrend that we saw since the end of last year, in my opinion, it's still intact, and I think that we are at a level in the market where you can I don't want to say speculate to the long side, but at the end of the day, that is what is going on here. You're speculating that the market has gone down enough, the sellers could be exhausted, and you look for some type of reversal back to some resistance level. So that's what you're kind of looking for, and if price agrees with your thesis, that makes it a lot easier, because you'll make money and not lose it. But remember, we've been talking about selling the market. If I remember right, in this entire area, generally speaking, there's been opportunities to the long side, and I think I've done a decent job of exploiting them. But ultimately, you want to look to be a seller in this market, and it paid off, especially if you're net short. Then it definitely paid off. But now my thesis has changed, and I think it's right to basically at least scale out of the shorts. Hopefully you've done that by now, and trying to exploit the long side for a test back of this bounce range we saw back in early parts of May. Back on the daily charts, I just want to run through the other futures just so you can see them. The Dow, you can see this is the beauty of volume profile. Zoomed in one too many. We have a high volume area from around 11,800 or so to 12,150. And then we have a light volume patch, and then we have basically heavy volume at 12,300 or so. And so far we have held the bottom of that, and looking to see a bounce now with this point of control up for the year, up at the top end of this range. That usually bodes for some type of top, overall top. But for right now, you know, you can only trade what's in front of you, and right now we have a defined risk buying opportunity, so take advantage of it. Hopefully it gets higher than 12,580, which, you know, the current of this high volume area. If we get above that, then we probably go to 12,750, and from there you probably go and test this point of control, or 13,000 or so. NASDAQ creeping up on this trend line here, a little more time sideways, and we'll touch it at some point. But we're at the value area high for the year here, and I don't, you know, this line's irrelevant really. We're in a light volume patch though, so potentially we could go back down to 2,300. Let's call it 2,400 to make it easy, which was basically the breakout level. And you know, it's a very possible thing, though you would have, you know, a lot of stuck buyers who are probably, you know, still selling. But nevertheless, you have your risk defined to the downside for now, and it's so long, you know, if we make new highs here, we should be okay for a push back up towards 2650 or so on the NASDAQ. Volatility index getting slammed by the 50-day moving average, also 25%, $25, whatever you want to call it, 25. That was an important swing level back in October. It was a huge breakout level in July, August last year. So just be aware of it and realize that people are selling, investors, traders, selling volatility up above 24, below 25. That's the sweet spot, and that's where you look for sellers of volatility. We are also at, you know, what was resistance, could now be support around 21, but the VIX, it's not the greatest in terms of support and resistance. It's kind of hard to determine. However, you know, just like anything, when people are willing to sell, you know, it comes down. If people are willing to buy, it goes up. Oil, try to say you could get long oil a couple of weeks ago, a couple of days ago, whatever it was, against this 12 mid-December lows. We pierced through that. We're still at the value area low here, so I'd still like to think this is an opportunity. We're also at $90, kind of a psychological level, but nevertheless, you could see some type of bounce here back to the mid to high 90s. That's kind of what I'm expecting if we get a broad market bounce. Notice also with gas coming down, I know it's around 340 here now, for regular, that is. You look at names like Starbucks, you know, all of a sudden they get a little more interesting, you know, when gas is coming further down. Even Target, basically retailers in general, they become more interesting, and they, you know, if people have more money to spend because their energy prices are lower, you know, that should do well for sales in stores like Starbucks and Target and various other retailers. So just something to be aware of. Natural gas is sitting right above the point of control for the year. You can see the huge high volume area. Basically the top of it is at $2.77 or so. And the bottom of it, it's around 220. Let's call it 225, just to make it an even number. A lot of price action, a lot of heavy volume for the last year here. I'm not saying there's an opportunity. Maybe you could do a put spread or something on UNG. I think I actually looked at that the other day, whether it was the 21st or 24th, I don't remember. But that ended up being a pretty good one. Probably still has more to go on UNG. The natural gas, it's consolidating. It's at the top end of the range on a bigger downtrend. So just pointing that out. Gold still at support, still bouncing. It's not bouncing like you'd want it to if you're long gold. Strongly low against the value area low for the year. Looking for 1650 or so, or retest of this range. This huge high volume area from 1635 or so up to 1666. A lot of damage done there. Probably get a test of that at some point. Silver, we're just kind of similar to gold. We're back at the lows, looking for a bounce. Whether it's a bounce for sellers to get short or looking for a good bounce back above 30 to test this high volume area, it's hard to say. The best way to probably look at it is you have recently huge high volume here. Kind of use that as your pivot level. You can see it's really been a good one, and if we get above it, you should get a little press to the upside, good enough for a trade, maybe up towards 30. Now I'm going to quickly go through some names that I think that you can own. So here they go. American Electric Power. It's a utility. It's a slow mover, but it continues to hold the bottom of this range, value very low, point of control, and on top of that, it yields a 5% dividend. So something that you can sell with covered calls against. Bristol Myers against point of control, 200-day has been bouncing for a while. You can take your shots, but this is another name that it's going to be harder to trade technically, and the easier way to trade it tends to be buying in scales and letting it work for you. But it's another one, pays 4%, and names like these continue to work. ConocoPhillips down close to the bottom end of the range. Another name, a 5% dividend on ConocoPhillips. I mean, it's hard to shy away from stuff like this. This is a covered call candidate, and I don't think it's going anywhere fast. It's probably something that you can scale into over time. It's not going to move a whole lot, especially now that they've spun off some more of their company. But it's something that you can look at for your portfolio. Hewlett-Packard, the only thing I can say about this is this one day 523 is a complete reversal day. I think it's called an island reversal. You put your stop, you can really put your stop anywhere within this range, and I think you'll be okay for potential trade. But at 20, 21, 27 or so, there's been one trading day under that level, and since then it's been above. I think you can be long from that level, and go from there. Intel off 200-day, 3.3% dividend, cover call candidate. These kind of names will help you enhance your returns a little bit. If a dividend is like an underlying put in the name, and where people are looking for yield, and you combine that with some covered call strategy to increase your premium, and you find yourself making anywhere, say around 20% annualized over a 1 year basis. Monsanto off the point of control for the year. This is a great example. Held like a champ. we're at the middle of the range, so I'm not saying buy now. But if we get a pullback back to this range, and then we get a bounce, that's probably something that you want to be long. Maybe you want to buy a fourth of a position here. But I'm not saying, go all in. Pepsi continues to work. This was not one that, I was recommending back somewhere in this range. I think it was back at the beginning of May. And it's starting to pay off, and I think it's something that you continue to be long. Pfizer, another dividend payer just like Pepsi is. This one is 4%, right at the point of control for the year. If it holds here, great. If not, and it starts moving lower, maybe you want to scale out of a little bit just to avoid some capital gain losses. But around the 200-day, I think you want to start picking it up again. And the last one I have is Qualcomm. Everyone was gung-ho about it on its way up. Now on its way down, it's dropping like a rock, but this point of control, and we got 200-day moving average right at these levels. I think you can pick it up and place a stop. Well, pick it up in, like, say, in a fourth size position. Let it see what it's going to do, and then start going from there. If it starts turning around, add to the position. So, and if you want to know about Qualcomm's dividend, 1.7%. So it's really not that big of a deal. So anyways, that's really it. Wanted to give you some ideas and kind of go from there. And I wasn't sure if I remembered, but Costco recommended it back when it pulled back to the 200-day moving average, and it's been bouncing for a couple weeks now. If you get any kind of pullback, you can buy a little bit here. I know the dividend's pretty small in Costco, 1.3%, so it's not a big one. But this is a name. 200-day moving average has been a place to buy. Here we are again. We'll see if it works out. The only way, you got to be in it to win it, but the best way to do it is manage your risk. So, take care.